Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to get started with swing trading. This is definitely going to be a beginner's guide to get started, so I hope you guys all enjoy it. If you guys have any questions, by all means, ask down below. And if you guys want to learn more about swing trading and trading in the stock market, I highly recommend going on and checking out my swing trading school. It's absolutely fantastic. The Swing Trading Masterclass, I'll put it down below. We're doing a very exclusive sale for 50% off, a little early spring sale. You guys absolutely loved it last week, so we decided one more week, let's do it. Code half off for 50% off. Check it out down below. It's great. We have private live streams, group chats, all that stuff. It's beautiful. So guys, let's jump into this here. So getting started with swing trading, how do you do it, and what are kind of the steps and processes that I would recommend? And don't worry, we're going to be breaking down a strategy at the end that you guys can start doing to make some cheddar cheese. So how do you get started with swing trading? Well, in simple terms, swing trading is actually very easy to get started. All you need is a broker to buy and sell positions. That is it. A lot of people love to overcomplicate trading, and yes, I get it. There is going to be brokers that make it easier to trade, that are better suited for traders. But honestly, you can get started with almost any broker because you're buying a position, you're holding it for more than a day, but less than 1 year. On average, I do hold my trades for anywhere from 6 to 9 days. Yeah, there will be times where I buy it today, sell it tomorrow. But on the flip side, there will be times where I buy it today and sell it several months down the road. It all depends on my strategy and mindset behind that position. So on average, like I said, 6 to 9 days is going to be my bread and butter. So getting started with a broker, I always think it's smart to, have a broker that, in my opinion, is suited for trading. I think having that gives you a little edge over people, and a broker that is designed for trading does make it easier because they have scanners, they have paper trading. They have things to make it easier to learn and just navigate through the market. Now, the best brokers, in my opinion, are going to be Moomoo. They're absolutely fantastic. They offer great charting, just like this, and we'll talk about this here very soon. But they offer great charting, scanning, AI monitors. They offer paper trading. It's great. Another one, TD Ameritrade, is absolutely fantastic as well. And as a consumer, or a user of, the broker, the great thing is you get to pick a broker that you like. Don't pick one because I like it. Pick one that you guys like, that you guys can navigate through. I think that it is going to make your trading a lot better, and it's going to be a lot easier for you guys to get that ball started. So after you guys have a broker, I'll put Moomoo down below because I love them. I'm not sponsored or anything by them, but they are great. But now after you guys have a broker, what's going to be that next step? In my opinion, the next step is going to be learning as much as you can and getting used to your broker and kind of the strategy you want. Like I said, if you're a swing trader, maybe you like swing trading ETFs, index funds. Maybe you're start like day trading or whatever. Maybe experiment, have fun, paper trade a little bit. Just, get that ball started of having some sort of passion for something. I always find people that when they are passionate behind, swing trading, day trading, trading in general, they're just more likely to succeed. Yes, there is a lot of people that do it for the money. That's why I do it. I do it because I enjoy it and it pays the bills, right? That's why you trade. That's why everybody invests in the market. That's why people buy stocks. Isn't because it's fun. It's because you make money from it. So, I think that, having a passion behind it is going to be great. So for me, that next step is going to be to just have fun, experiment. After you do that, it's going to be to paper trade and learn as much as you can. This is going to be those hours that you're spending grinding, watching YouTube videos, watching courses, whatever you guys choose to do. In my opinion, I think it's smart to paper trade and just have someone to kind of watch and follow. And what I did and how I made my strategy, I watched a bunch of YouTube videos. And yes, I have a course, but do you need a course to be a successful trader? No, you don't. One of the things that you guys could easily do to make it swing trading, pick bits and pieces from other traders. every trader is going to be different. You're going to be different from me. And I think you need to have that approach with swing trading. Just because you have a strategy that works well for you doesn't mean it's going to work well for other people. So, I think that's super important. But during this time of paper trading and learning as much as you can, this is super important because you always hear the expression of the more you learn, the more you earn. And swing trading and trading is just like any old job. It's like a doctor or engineer. It takes practice and hard work. And I guarantee that if you devote anywhere from 9 months to a year on learning whatever it is, you're going to be very, very successful. A lot of people jump into trading within 30 days, and that's why you hear that statistic of 80% of swing traders fail or traders fail. It's but they also never spent the time to learn, and you got to have that approach. Invest those hours, invest into education. I cannot stress it a month. Check out my course. It's great. But all right, now that we kind of understand that, we have a good plan. Now let's talk about a strategy that I would recommend. The strategy that I love is going to be, moving average lines, RSI lines, and certain indicators. So for me, I love finding opportunity on moving average lines. Now the ones I love are the blue and red ones, the 90 and the 200-day moving average lines. They act as support and resistance, trend indicators. Another indicator I use is going to be the RSI line, the relative strength index. It tracks momentum. You always want to try to buy it low, right? Buy low, sell high. That common thing we hear as traders or people that just follow stocks, buy low, sell high. So for me, this was more of a recent position I took, and this is on Macy's. You guys can see it's very, very clear once we point it out. Every time it hits this blue line here, we've gotten a good tendency of getting buying pressure, right? It hits it, we got that good move. Recently hit it, we hopped in, stock rallied up to $20. And when we buy a position, we always have target price. We have target prices and we have something called a trailing stop loss. So if it does dip down 2%, we just sell our position, sit on the sidelines. I've never lost money taking profit, and that's kind of what I did here. The market did sell off a little bit today. It sold off 3%. So we saved ourselves 1% because we took profit, when the stock dipped down 2%. So we made a decent amount of money off this trade. But how did I know it was going to happen? How do we know it was going to move up? So I used the moving average lines. I used that 90 and the 200. The 200, so this red one, is always going to act as a harder support than the 90. So if I'm going to buy a position, I want it undervalued. I want it on a moving average line because it's support and it's also trend indication. We find stocks on some sort of upward trend that have sold off down to a level of support. Another thing is looking at the RSI was trading for 32. The last time it was trading for that was all the way back in here where we had this great move. So just giving us a little indication where we could see that move. And yeah, this move was only like 4%, but I'm telling you, this is where swing traders get made. It's not off these 300% returns, these $30,000 profits. No, it's about doing this, making $1,500, $1,200, and just doing this, finding these plays. And yeah, it's always great having good risk management skills, understanding that. And another trade that we took here was on ticker symbol AMD. This one here has heavy support near and around this 163 area. You guys can see it hits it. We got natural tendencies of getting good buying pressure. And I understand right now tech is a little inflated just because we've seen companies like NVIDIA, AMD kind of squeeze up. So our plan was to hop in a little lighter with our position size just because we knew the kind of market that we're in right now is that we could easily get sell off from tech. NVIDIA's up 75%, starting to sell off and dip down a little bit. Now for me, I want to buy these companies at a cheaper price for the long run as well. So, I also think that possibly swing trading these where we've gotten that heavy support here. We have that 90-day moving average line. It's undervalued on that RSI, and we could easily see this stock start squeezing up. And yeah, it did dip down a little bit today, selling off about 4%. But for me, in my strategy, this does not concern me at all. I have all my risk management in place. I have my stop loss orders. Risk and reward is 3.17%. Risking $1 to make $3.17. So, the great thing about this strategy is I don't have to be right every single time because I have good risk management skills. I could be wrong 2 times with this position and still make money. And that's the great thing about understanding risk management skills and basic risk management is doing stuff like this. Understanding, okay, my risk management here is 3.1, stop loss here is 160, profit's going to be up here at 182. Hasn't hit our stop loss. We could easily see that turnaround back up. And if it doesn't, we take our stop loss and we take a little loss. Trading, you lose money. It's part of the process. But what separates winners and losers is understanding, 1, what went wrong, 2, your risk management skills. If what went wrong with this position, honestly, what I kind of started to realize is just the overall tech market lately has been getting a little bit, getting a little bit crushed. And so we could have gone a little lighter than I did, but we still went very light. So we'll see what happens with this one, but it's definitely worth noting and understanding that all trades aren't winners. And so having good risk management skills is super, super important. But on the flip side, look at this other position we took about a week ago on ticker symbol PARR. Hit that 90-day moving average line, went from 36 all the way up to 39. Beautiful trade. You guys can see that this thing hit that 90-day moving average line, hit our profit, and then sold off. Absolute beautiful trade. And this is what we focus and practice, is understanding indicators and your strategy. So guys, I hope you guys all enjoyed this. If you guys did, hit that like button and subscribe. And don't forget to check out my swing trading school where you guys can learn how to trade. Like, subscribe, and we'll see you guys in the next one. Take care.